All right, yeah. So now it's recording. I'm sorry, it's going to be a little bit delayed, but better now than never. Okay, perfect. So next one, share. So you guys got the stages, okay? And let's move to the next one. Know your appetite for risk, guys. So the problem people have and what they do when they are trying to buy stuff and invest and trade, they think they have a high appetite for risk. And yes, if everything goes well, it's easy to see because you might buy more than you should and you might allocate more funds, or you buy just one stock or two. But when things go badly, that's when you actually realize that you are not as risk averse. So it's always extremely important to know yourself before you invest, before you buy anything. You need to understand that there could be a really ugly moment in the market. And how are you going to feel? Are you going to freak out and sell with a loss? That's the worst. Like in months like this in September, although the SPY S&P is only down about 5%, but high beta stocks might be down 10% or even more, right? We had a sell-off in August as well. So how is it going to make you feel if suddenly your portfolio is down 10, 20%? Are you going to be fine with that? Can you stomach it? Can you actually sleep? If you can't, then it's maybe better to invest into an index, an ETF, or mutual funds because they are less volatile, right? It's much better than to invest in individual stocks, because if you can't sleep and you're stressed, that's no point to do this, right? So you need to know your risk appetite. That's super important. I will suggest you to do it. And also know, I'm not a financial advisor, of course. I don't want to give you advice on what to buy, but I'm just trying to protect your money. And I think that knowing how long you have and you don't need the money is also very important. If you're 10, 20 years, you are fine. Just believe in the companies that you own, do your research, and keep buying them on dips like we have this month. It's totally fine. Just keep adding. You can add every month. You can add much more when the company is down 10% or 15%, having a hard time. But again, know what you own. And if you can't stomach the volatility, just own ETF funds. I think it's much better, and understand that market doesn't go straight up. Another tip I have for you is to not look at your portfolios. If you're not an active trader and you're more, I buy good companies that I know, I research, you don't need to look at your portfolio once in 3 months, maybe. You don't have to. You just own your stuff and look. And sometimes like people, they don't look every day and they don't look for weeks or months. There are people like that. They don't even realize we have a pullback like this or correction because they don't look. So that's another thing. You can look every 3 months and evaluate what you own and see, maybe, okay, do your research on the companies. I have 10 companies or 5 or 20, whatever suits you. I wouldn't have more than that. And basically let it run. Don't look if you have a problem, right? Some people don't mind it. I don't mind it. If I'm down $100,000 on a day because there is a bad day in the market, I don't care. I look what I can add to my portfolio. But it took me a while to get there. And if you're new, it can be really, really bad. And also know what you own. Like, guys, the beta concept. So beta is basically measure of how volatile the stock is in comparison to the market. So usually the beta 1 means the market volatility. So if you have high beta stock, like for example, I have it here for you. I will show you some ideas, because that's also what you can decide what you're going to own. If you have high beta stocks, they're going to be moving as fast. Like 1.57 is Tesla. So if the SPY is down 1%, Tesla will be down 1.5, which is 50% more than the SPY. So if SPY tanks 5%, Tesla might tank 1.5 times as much, right? So if you have high beta portfolio, you're going to have really volatile moves. If you can't stomach it again, you might want to consider lower beta stocks that are mostly dividend stocks that are moving slower. But if you're young, you want to be in growth stocks, but then again, you have to teach yourself that this is okay, and it's market will go up at some point, right? You don't want to freak out. That's all I'm trying to say, because a lot of my friends and people I know, they have a month like September or like bear market we had last year, and all they do is selling with massive losses. They give up on the market. They never come back to trading. They never come back to investing. And that's really sad. Like, we want to be invested. You want to be investing and have the money work for you, right? Again, what I want to teach you now, which is really cool, is how to buy. You can buy stocks, and when you have dip like this. So always be ready with your plan. What do you want to buy? How much you want to buy, and for what price. And this is very important. Means you have to have a plan. If you don't know what you want to buy, you're going to just be freaking out when the market is dipping and you're not going to be ready. So in 2020, for example, I went on a vacation in September, as I always do. I love September. What I did, I wrote down 10 stocks I want to buy, and I was pyramiding into those stocks. You guys know dollar cost averaging, right? But pyramiding is even cooler. And I will tell you how I do it and how it really makes mathematical sense. And I'm going to share a chart with you so you can understand what I'm talking about, because it's really cool strategy. And let's do it here. So guys, text me, please. If you can text me some stocks that you want me to look at. If you want me to look at something that you would want to buy on a dip, I will do a research. If not, I'm just going to go and start with some Google, Amazon, Tesla, and stuff like that. Okay, so QQQ, perfect. Let's do it. Okay, so you might want to say to yourself, okay, the QQQ rallied a lot. When we're going to have a pullback or correction, I'm going to buy QQQ. Okay, so you look at the chart. I have my 50 is the red, green is 20, 10 is blue, and then 100, and the 200 is way down there, okay? So this red line is point of control, which I always have, because it means at this, on a daily chart, there were the most transactions that happened on that price level, on that price 365. So it's a very strong level. You see, we have the gap there too. So you look at the chart and you're going to draw support and resistance lines for yourself. It could be around moving averages. It could be around gaps. It could be around point of control. It could be just simple resistance and support, okay? So you say, I'm going to buy on 3 levels. And most people, what they do, they just buy however comes, right? They buy whatever price. Okay, it's down, I'm going to buy. That's not a good plan, guys, because if you just buy a little bit there, you don't really know how much you bought last time. It's going to be really shitty averaging in. So what you want to do, you have the lines. Okay, so let's say in July, you know, you said, okay, if we're going to have ugly September or something like that, I'm going to be buying. So you can draw the line. So first one, you here have a level of a lot of interest, right? You can see it here around this 365. So you can have the line there. Even now it's an official point of control. You have one line, okay? The other one you might have here. You say, okay, if we get down here again, because that's also strong support, 1, 2, 3, I'm going to buy. And then you can have another one, a third one, and you're going to draw it, right? Horizontal line. And you can say, here's another one. I like if QQQ gets to 346. Always draw the nice lines and buy. Even fourth one, I wouldn't even mind having a fourth one, because the market can go always lower than you think. You know, market is tricky. Here is a gap. You can say, okay, boom, I have 4 levels. But how are you going to be buying now, which is really fun? You're not going to be buying the same amount every single resistance. I'm sorry, I moved it. You're going to be buying 10% here, because you just want to tiptoe into this strategy. You know, like you don't want to be on the first level and just YOLO into the shares. So what you're going to do here, you're going to buy 10% of your shares, right? You say you want to buy 100 shares. You have to know always how much you want to buy and how much money you have. Okay, so you say, I'm going to allocate 10% of my capital here. Okay, so you buy 10% of your shares. You're patient and waiting. The next one, the market dips here. Woo, okay, we're lower. So you're going to do here, you're going to buy 20% of your shares, right? Why wouldn't you? You buy more. And then you're going to buy here. Let me see, text here. Boom, you're buying 20% of shares, and then 30, and then 40, okay? So you know what I mean? You're buying more as you go lower, because that's how you're going to average in pyramid. It's basically like a pyramid. So let me see, I will draw it for you. Boom, boom, boom. You see what I mean? Because if you're just averaging in the same amount always, sure, you dollar cost average, but this is much better, because that way you can have way more money, and you can have way lower average. So that's perfect that way, you know. And here another one, you can have the 40% here. Yes, zack, done. Okay, so 40%, and that together will give you 100%, guys. Okay, so oh my gosh, this software. So you understand the point. TQQQ, I quite frankly, dear, you are not investing into TQQQ. TQQQ and all these triple like SOXL, all these guys, you just buy them for very short term. You know, you're not buying them for investment. That's too risky. That's not what I would do and what I would suggest. I buy TQQQ when I know that there is a reversal and we are going to go up, and I want just quick 2-3 days straight, make 3 times the money as I would do on QQQ. But these guys, you don't hold for a long term. This is more what I'm talking about. Like these are month trades, which I'm talking about now. You hold these positions for a while, or even you invest, you know, you can hold them for months. You can hold them for years. That's how you're adding in. But this is a great strategy. And yeah, you might say, okay, this 40% might never happen, but it's okay. Because guess what? If it doesn't happen, this means that the market going up and you're making money. So you're happy anyway, you know. And the psychology around the dips is great, because if you have this plan, let's say it's September 1st, you know that September is the worst month of the year. You're going to look at 5 companies that you want to buy, and you're going to create these pyramids, and then you place the limit buys. Okay, you do it before the storm starts and you're ready. And if you don't want to look at it, it means less you look at it, less emotions you're going to have involved, and less mistakes you're going to make, less FOMO, less greed, less fear you're going to be experiences, and you don't care. You have this ready, and you're going to have it work for you. You just get an alert. Oh yeah, I got these shares assigned for the price I wanted. Isn't it great? Imagine you go to a store and you say, oh my God, I want these shoes, but they're $800, and I put my bet, and maybe in 2-3 weeks they're gonna be, or 2 months they will be $400. And suddenly you get an email and say, oh my gosh, I got the shoes for 400. I'm so happy. And that's how you need to think about the stocks as well. It's a great way to psychologically be actually happy about the dip, and instead of being freaking out, you know, and then like instead of selling with panic and looking at the red and red sea, you know, a lot of people do it. You guys want another stock we can look at? We can, if you guys want, we can look at something else. So yeah, Ron, just to answer Costco. Okay, let's do Costco. So let's look at Costco. I love Costco. I always wanted to buy Costco. This is great for me too, because I don't have any. And I missed this beautiful sell-off we had on the earnings. Yeah. Okay, Costco. Lovely, lovely chart. Let me close these indicators here. So I'm going to tell myself now, Leah, I want to buy Costco. If I'm going to see Costco falling back, I would say this is a good level for the first one, somewhere around here. Is never really perfect, you know. People spend so much time drawing the perfect lines. Don't worry about it. It's a level of interest. These are zones. So I say, okay, around the 550 would be like my first one usually, you know. So 552, that's my first. I would buy 10% of my shares. They're very expensive, okay. Next one I would do around the 100, tiny bit below, because stocks love to dip below the moving averages for some reason to trap people, because a lot of people, they just start trading, a lot of retail, a lot of algos are going to start shorting there. Boom, you want to place it somewhere here, 534, that would be a great level to actually start buying to 20%. And then I would look at the chart again. This looks like a nice level of interest here, or I would just go somewhere here, boom. That's my 3 levels, okay? So 3 is enough. If Costco gets below it, I would go to the point of control. That would be my last one where I would really buy a lot, okay? So that's Costco. Again, you do the same thing. You buy 10% here, as I said. What else do you guys want me to look at? I actually like the Costco. I might buy Costco anyways for myself. That's a good idea. Cool, perfect. Yeah, QQQ you can hold, Ron. Absolutely, QQQ I hold too. We hold, you know, it's fine. But the TQQQ, no, you're not holding those for too long. PLTR, let's look at that one. My favorite stock. I have so much. I was adding actually yesterday. I love Costco too. Yeah, PLTR, great. Nike, let's look at both of them. Okay, this is a fun thing because I want you guys to learn this. It's really, really important because if you think about the math and you do the pyramids, you're going to have an excellent average. And the same way you can be selling the stocks, but you're going to be selling them like this. You're going to sell when they go up, you sell a little bit here, you sell more here, you sell more here. And when it gets really high up, you're going to sell the whole thing. The last 40%, right? That's almost like a trailing stop, but you have a mathematical way to do it. So when it gets just to a little bit higher, okay, you know, you have to see how it's going to be going up, but you get it. So pyramid and the upside pyramid, that's how you're getting out of the position, which is also really good. So let's look at PLTR. Same thing. We dipped actually really nicely. I was buying some last week. Again, like we are right now here. So that would be my level of interest, would be around the point of control. This indicator is really good. I'm not sure what you guys are using, but it's our volume shelves and it's called number of rows, VRPN. Okay, it shows you how many transactions happened that day on what price. And these are really cool resistances and supports. I love using them. So just did you know? So that was a good dip now. So if I would be in PLTR, I would be like, okay, this was great around this 15 something, around this moving averages around the 100 would be great because look, here is like nice zone, here is nice zone, here is crazy zone. So this is a good place, you know, a lot of transactions happening there. What this red line also means is if you have it as a resistance, like right now, it's working there as a resistance, PLTR will have to work a lot to get over it because there are so many transactions happening, okay? So that would be my first. My second one would be here. My third one, if we go lower, I would be adding 1365 somewhere here. You see you have 1, 2, 3 touches. You try to do the lines at least with 3 points of contact. 3, 1, 2, 3, okay? And then the fourth one, God forbid we get there, I would be yawing 40% of that capital I allocate for PLTR right there. Okay, so just think about shares. You buy 100 shares here, 200 shares here, 300 shares here, and 400 shares here. Okay, it's super simple math, right? Boom, 100 here. I will write it for you. Well, if the dip keeps dipping, then it can always happen, right? It can always happen. You never know in the market. We might have another crazy news and the dip keeps dipping. It really can happen, you know. But if you're gonna think this way, again, like PLTR doesn't strike me as in a four stage. We had a pretty nice rally. It's some sort of an accumulation zone and distribution for sure, but I think PLTR is not falling crazy. Like, I don't think so. It doesn't look to me, this stock, that it would be in like PayPal, you know, for example, that keeps going, or Square that keeps going lower and lower. This is like a horrible chart, right? So you wanna always like compare it, or like Meta, look, I'm waiting for Meta to dip, but Meta is just really stable, doesn't want to really dip. It's just very good stock for now. It's been amazing. But if Meta would go lower, I would be definitely, I would enjoy to add, you know, Meta more. Here are my levels. I would totally, here is the gap. Gaps not always fill on individual stocks, but yeah, you know, it can happen. But like, this is a beautiful, beautiful, beautiful retest here with the 100 moving average. These are the stocks I don't mind adding on a dip, right? Because it's really nice. So yeah. Yeah, of course. With this strategy, you have to, because this is, you're allocating a lot of money for a longer term into this strategy, right? So you need to know the companies you're buying. This is not a trade. It is a trade, but it's not like, when I day trade, I do not care what the company does. You know, I really don't even know sometimes. I know the volume, I know how many shares are traded, I know their technicals, and that's what I care about. I see this chart and I see if it's a low float or you know, that's why I choose the stocks to trade. But I have no idea about or desire to know many of these companies, what they do, right? The same with swing trading. But when it comes to position trading like this, where you're allocating more money and where you are actually thinking to invest for longer term, you need to understand the company exactly, because if you don't, what's going to happen the moment that the market starts falling and you don't have a trust in the company, you're going to freak out and you're going to sell. And that's a lot of people, they buy stocks from Twitter because someone says that, but they don't really know why are they buying the stock. They don't understand the fundamentals, and that's when shit happens. So yes, absolutely, definitely. That's very good point. Yes. All right. So you guys understand the pyramid. It's really good strategy. I suggest you do it. It's really cool, and you're gonna have amazing average on the stocks that you really, really like. And always be cautious, you know, if maybe sometimes, you know, if you don't want to lose too much. Again, it all comes down to your risk profile, to your risk appetite, your time, your age, all these things. Maybe you can tell yourself, okay, my pain level is 10% loss on an investment. I do not want to be below that. And you can say, if I'm down 10% and the dip keeps dipping, I'm going to get out. So yes, it's money, but imagine companies down 40%. So there are situations like that, and we could see it in 2022 and even 21 with a lot of companies. So you can say that too, because, you know, if you shouldn't sleep well for years, then you rather lose the 10% and get out. But always look at the chart before you make a huge decision like this. Because you might say, oh no, it's 10%, I'm getting out. But actually, when you look at the technical chart, it could make sense that we bounce. So you want to look at that. Always look at the chart, no matter what you do. Even investors, like a lot of investors I know, they just literally go and buy stocks and they don't even look at the chart. Why would I be buying when I'm in all-time high? Things always come back to the medium, and the prices come to the mean, and it will happen. It's just all about being patient, right? So you can buy continuations too. Yes. If you are in a stock that's really good and it's doing well, you can add. Okay. Yes. All-time highs are tricky. You can add a little bit. If you see there's a lot of volume, there is a good sentiment, you can, but just be very careful. If you see the stock, like I just show you SPY, okay? Because we had so many signs here. You know, if you see the stock doing this and it's just hovering there, and when it crosses, when you start seeing all the big moving averages pointing downward, and you see this happen, you want to be out. Like you see, here's a trend line that's been broken. Unless you're an investor who doesn't care about the time, okay? So yeah, you see, you're lying. Okay, yeah, Ron is texting, okay? So he wanted the continuations. I explained you can add. I, for example, add to winning trades also. When I'm in a trade that's going really well, I am adding, you know, because I see the volume, there's the sentiment that everything is aligned well. You might add to trades like that. That's totally fine. And investments also, why not? You know, we just add a little bit. Okay, so next slide. Okay, so I explained to you on the pyramids, and let me share again back my presentation screen with you. Tuck. So as I said, you know, you can buy around supports, around moving averages, around gaps. I love gaps as well. Gaps work really magic as a support and resistance. Beautiful, you know. So that you can always have your levels around there, okay? You need to get a sign. So have a plan, be patient, and you know, don't lose your money, guys. Because dips are actually great opportunities for you to make money and not lose money. You know how many people just like freak out and sell, and then they're sad and they're trying to get back into the game, and they are buying for much more money. So that's not what you want to be doing, right? All right. So I explained to you the psychology as well. You know, it's just basically market is designed to scare people, and you want to be ready with your money and understand. Of course, Ron is saying he's permeable. Yes, because the market is going up 70% of time or 75%. And the psychology around all of this is, if you could see it when we have dips like this, the negativity that comes into social media and news and everywhere to scare people even more is crazy. So just like, don't look at it. it's fascinating to see. And why they do it, because psychologically people love to see negative news. When you're pessimist and you're spreading negativity, you're actually sounding really smart and sophisticated. Sadly, it's like that. But remember one thing: when it comes to investing, only the optimist will win. If you're going to be constantly negative and you will be selling and you will be scared, you're not going to get anywhere. So have your plan and understand the market, and you will be fine. That's how I survived all these dips, and I survived all market pullbacks, and no panic selling if you have the conviction. And if you do not have the conviction, then maybe you want to reconsider your investments. Maybe you want to look at the company again and ask yourself, why do I own this? Why do I own this stock? Actually, sometimes I look at my portfolio and there's like 1 or 2 stocks that I'm like, why did I buy this? And get out. If you don't trust the company, there is bad sentiment, the company keeps falling, it's probably better to get out. Like, you rather take a smaller loss than you wait for years, and not only like you lose the money, the red and losing of money, realized loss is one thing, but you have huge opportunity cost. You have a huge opportunity cost about not being able to invest that capital somewhere else, guys, because there are so many amazing companies that are doing really well this year. And imagine you're stuck in some bags and you're holding something that's not moving or even falling. That's the worst. So reconsider your investments if you don't feel safe. And now let me just go to the last thing. And I'm doing a cohort that starts on October 8th. And it's a very new thing. I've been working as a coach for 10 years with couples and relationship and marriage counselor. And I love coaching. I love teaching. It really fulfills me. And if you guys want to sign up, just send me an email to Leah the Trader, and I will send you all the information. It will be 5 weeks. You're going to be working with me 10 sessions. Every Sunday will be a theory session where I'm going to teach you a new topic. And then in the week, when the market is open, we're going to go over the practice. So it will be all from options to technical analysis, psychology around trading. It will be focused on trading mainly, to learn swing trading and stuff like that. So yeah, so here is my email. If you guys are interested, you can just shoot me an email, write cohort like this, and that's it. I will send you all the information. We're starting in 10 days. It will be a very small group of people, 6, 7, 8 maybe, but just a little group, because I want to make sure that I can talk to everyone. We will be on Zoom and we will talk. I will talk to each of you if you are in my class. Plus, you will stay in my group for a lifetime, and I share a lot of trades there, or more like the market idea. Yeah, so I'm going to do mostly swing trading and position trading, because that's what I'm good at. That's what I make the most money, and that's what I specialize in. I do day trade, but I don't day trade so much. I don't like day trading as much. I take it when I see a great setup, but I found myself specialist around stocks, individual stocks. But again, SPY is the same thing, like whatever you want. It doesn't matter. If I teach you a strategy on swing trading, you can trade anything with that. Okay, you can trade ETFs, you can trade stocks. And then we're going to have a whole entire session on option selling and spreads, which I really love, and I'm doing really well with that. So after a long time of trading, I found what I like and what works for me. I know what I make money with, and I want to teach that to others. And I studied a lot. So I studied with CMT Association. I read a bunch of books. I practice every single day for 4 years, almost every single day I trade. I probably skipped 4 days. So I think the hours of torture and practice are there. So if you guys want, I'm happy to host you there, and just let me know. Yeah. And now, please, if you have any questions, ask me. Okay, let's go. Atif, okay, you wanted to Google an AMD. I'm happy to look at it for you. Let me do that. So I will stop sharing here. Let me see. There's so many monitors, it's not even funny. You guys know how it works, right? So let me go back to trading view. And we're gonna do Google. I love Google, actually. I have a lot of Google. It's my favorite stock. Woohoo. So let's look at that super chart here. And let me share this with you. Share screen. Okay. So Google and AMD. All right. Google. So Google has been holding pretty well considering the carnage we have on some stocks. I love Google. I think Google is great. So if I want to buy more Google, which I would not mind doing actually, because I sold a bunch, I was up, I don't know, 80 or 90%. I have it all recorded on Savvy Trader, which is public. My portfolios are public. I do things very transparently. So Google, I would definitely love it around here. You see the 100 moving average yellow. Here are these zones. As you can see, these are strong zones for some reason. And here also, here is a lot of volume that has been at this price level. So I would definitely add more Google around there. All right. And then we can go more. Here is a huge gap here around the 200. Boom, that would be lovely at. And then here around 104. I certainly hope it's not going to get there, but you never know. It's good to have the options. So here you see 1, 2, 3 ads would be great. I wouldn't mind doing that. And if we look, of course, no problem, Atif, that will be 1. Because if you look at this linear, from there, this is 10% down, this is 18, and this is 25% sell-off, right, on Google. And it can happen again, like if the SPY goes down more, everything is possible. In 2021 and 2, when things start selling off, did you think it's going to go so low? Like some of the stocks, like, did you expect like Meta would go to $95? Really? Nobody expected it, but again, the stock market and the stocks can go really low, like you never know. So you wanted AMD. Let's look at AMD. AMD is in this interesting something. It's on 200 moving average. It looks like a giant flag, but I don't do flags that are across 4 or 5 months, because I don't think that's really a legitimate flag, quite frankly. Like flags are the flag, you guys know what flag means. It's they actually perform really well by statistics. Flags are some of the most reliable patterns. Okay, again, research that been done by CMT Association, so if you have the flag, you can have a breakout out of the flag. This would be a bull flag, but again, I do not draw bull flags that are 4 or 5 months long, just that you know. Okay, but AMD is on 200 moving average right now. Okay, so it's a very, very strong level, and I kind of am a little bit worried to hold stocks below 200, but again, the best deals you get below there. It depends on how much time you have. If you have time to hold it and it's your favorite stock, I love the stock too. I own it. I actually bought some yesterday, 2 days ago. That was and I sold puts around this support, which I love doing too. You could go even somewhere to 80 and see what happens. Just let's give it a time. Maybe if we tongue, this would be great level too. Look at this around the 80s. Great 80s, 95, 80, and then even lower here to 60s, 60s, 70s. So have your levels ready. AMD is a great company. Okay. Another question is, when do you take your profits? So when do I take my profits? It depends what portfolio I'm investing in. I usually want to buy companies that I believe in, like Google, AMD, and NVIDIA. All these companies I want to own at least 5 years. But there is a huge difference. If we see something like we saw with Meta, I bought Meta. I'm not gonna lie, but I was buying it for $95, and I was buying with a bunch of friends. They were hedge fund traders. We bought it, and then I sold by 125 because I thought Meta is going to go back down, right? And we thought it's back in last year. We thought, oh my gosh, this must be a bear market rally, so let's sell. And then I'm like, oh, this keeps going up. So I keep buying Meta. I ended up with like 300 shares of Meta. And then when Meta was getting here, I was just selling calls. If something goes up 100% in a short period of time, of weeks or months, guys, I will sell at least partial. Because quite frankly, 100% on a huge stock like this, it's a lot of money. So I will take my profits. I'm not going to make the mistake. Imagine all the people they were holding Meta from IPO just to see it going back to that price. The frustrations that they were going through was absolutely ridiculous. You don't want to be there. So if you see something going crazy in a short period of time, it's good to take some profits. Because I rather take some profits than I shouldn't, and then things get back and I'm going to be super upset. Look, this is crazy. Like people were buying it here and then look where it got. 89, 88, guys. This is horrible. Like people gave back profits of 6, 7 years, 8 years. My gosh. So yeah, you don't want to be that guy or that woman. You want to take some of your profits always when you have this huge. The same with swings. Like when I swing trade, guys, I have my levels when I want to sell. But if I'm up 6, 7% in 2 days on a swing, I don't care about my target because I got there very fast. And when stocks get to target very fast, they can also retest really fast. Okay. So remember that. Okay. So more questions. If you guys have any questions, if not, I don't trade crypto anymore. I used to trade crypto like crazy person. In 2020, 2021, I was holding crypto since 2016. What I realized, guys, this is very important to remember. If you do everything, you won't be professional in anything. You need to pick your battles. Like you want to be trading crypto, you want to be trading stocks, you want to be trading, you want to swing trade, you want to day trade, you want to specialize in 1 or 2 things. Because if you do everything, you will be completely exhausted and confused and you won't be able to excel in one thing. For me, I realized that I suck as a day trader. I make very little profits. It's not my thing. And I love swing trading. I make most of my money swing trading and I'm making additional income with selling options when I see there is a VIX is a little higher, like we had now last couple of days, I sell options. Exactly. Yeah. If you like crypto, please trade crypto. Crypto is super tradable with technical analysis. It's great. So why not go ahead and specialize on that if you like it, you know. I never say people don't trade this or this or this because everyone is different. Some people love futures, some people love options, some people love just stocks, you know. So yeah, experiment, you know, you can. It's fun to trade if you want to spend some time. But remember one thing too, when you guys want to become great at something, it's taking a time. A lot of people want to start trading and they want to be amazing after 2-3 weeks or a month. It takes 3-4 years sometimes, you know. It's like another job. It doesn't matter what job you do, you have to practice, you have to learn. And I want people to understand that, you know, maybe you won't be excelling the first year or 2 or 3, but then it's going to kick in and you're going to make a ton of money and you can scale in. And that's why I love the market, because you can scale in. I started trading with $300 risk. Then I was risking 500 on each trade, and 1,000, then 2,000, you know, like you just go up as you become more and more confident. So that's very good to know. All right, risk. Oh yeah, explain risk. So what I mean by risk, guys, is how much you're going to lose on each trade. And this is super important. And I keep repeating this like a parrot, because people are not profitable in trading for one big reason. They're all over the place and lose every trade different number. And that's very bad, because you want to lose on each trade the same number, which is going to be max 1 to 2% of your trading account. So if you have $100,000, you do not want to lose more than $1,000 up to $2,000 on a trade. I'm not saying invest into the trade. The trade can be $100,000, but you only want to lose, which means where is your stop loss? Will be max loss of $1,000 to $2,000 by 100 grand. By 10,000 is 100 to 200. And if you are super, super consistent with the risk and you let your winners run, you're going to be making money. And that's very important to understand with trading. But I have a lot of videos and webinars on that. This is not for today's webinar. I just wanted to mention it because I start talking about the risk. Okay. All right. So this been answered questions. Okay, perfect. Please ask. We have some more time. If you guys want to have any just a few stocks. Yeah. Ronnie's saying that you can trade just few stocks. Yes, I literally trade the same stuff on and on and on and on. And I love it. I'm trading NVIDIA, I'm trading AMD, I'm trading SOXL, I'm trading TQQQ, trading quick. When I see a reversal, that's when I buy those guys because they move really fast. I love Tesla. I trade Tesla all the time. Tesla is a high beta stock as well. I was sharing with you the high beta. The Tesla is 1.57 beta, so it's moving faster than the market. So yeah. Okay. All right. Yeah. Thank you. Thank you everyone for stepping in. Please, if you have any questions, I'm happy to answer them. I'll stop sharing this screen. I'm happy to answer whatever questions you might have. And I'm also going to send you the recording later. So you're going to have it. Yeah. Okay, let me see. Okay, questions. All right. Okay, guys. Well, so just a quick recap. Don't worry about the dips in the markets. Have cash ready always. Always some money ready. Know the stocks you want to buy. Have the prices ready. And even if you don't want to look at it and you don't want to miss it, please set your limit buys. It's called limit, okay? Limit buy and do good to cancel, because if you don't do it, or on each trade is 60 days, because if you just do day, your orders are gonna all disappear. And it happened to me, and it was super frustrating because I forgot to set up the time and I put all these orders in and I was laying on the beach happy, and then I missed a lot of buying because it was not good to cancel order, but it was a daily order, and that sucked. So make sure to not forget that. Thank you so much. Thank you, Natalie. Thanks for your kind words. And yeah, so again, just to join the cohort, just please send me an email at here, Leah the trader, okay? And just write cohort. I will reply to you immediately or whenever I have time, and you will have all the information. So I hope to see you there, guys, and have a great night. Shoot me any questions in email. Again, if you have anything you want to ask, I'm happy to help. And you have a great night, guys. All right. I'm going to wrap this up. Bye. Bye, everyone. Good night.